that will help you have a great trading week before the trading week begins. Do me a favor if you have been enjoying my channel, learning some things from what I've been teaching you guys, please hit the like and subscribe button. That'll help me out with the algorithm with YouTube so I can help more people. Okay. Couple of things. And one of the things I really need y'all's help with before I begin today's lesson, I typically like to give you guys a heads up on different news events to pay attention to or something important for your trading week in advance. Let me know in advance. Do me a favor, shoot me an email to superezforex@gmail.com. Let me know if you want me to go straight into the lesson and then save that for the end, or do you like when I just throw those little important pieces in as far as news events, updates on Bitcoin and other cryptos real quick before I can get into the lesson? Which one do you want first, the lesson or the little quick points? Let me know. Shoot me an email, okay? But for today, let me just throw in a couple of quick notes and then we're going to get straight into the lesson. I told you guys about 2 or 3 weeks ago. I told you. Y'all need to stop subscribing to all these little channels because they're giving you bad information. Especially if you're trading crypto, okay? And I'm going to get into today's lesson, but just listen to me. Did I not tell every single one of you about 2 or 3 weeks ago? I said Bitcoin is heading down. I even told you guys about what level I seen that it could potentially go to. And it within a range, not to a pinpoint, because nobody can pinpoint exactly. But did I not tell you guys when it was up in the 50s? I said, hold on. I said, this thing about to drop. And I said, I see it retracing back up to the 57, 58 level and then dropping. Look at where it is now. I just checked. It's at 46,000. Okay, 46.8 right now. However, the good news is if it was me, I would be dollar cost averaging. They call it DCA, dollar cost averaging in, which means, putting a small amount in every week or every month, what you've been doing, like a IRA or 401k, because for me, now again, I'm not giving investment advice. Okay, this is just what I see on the charts. What I see on the charts is that it's on the daily time frame. It's sitting on the two. It's laying its butt like it's on a bed. It's laid out on the bed of the 200-day moving average. It's literally sitting right there on the 200-day moving average, and simultaneously is sitting on the 38.2 Fibonacci level at the exact same time on the daily time frame. So again, I'm giving you exactly what I'm seeing so that you can go check your own charts, see for yourself if you see the same thing. But for me, I think this will be a great time to start dollar cost averaging in, buying a little bit more at a time. It can go lower, anything can happen, but I do see it at a very, very extremely strong support level at this point. But again, make your own choice, okay? But I told y'all, see, this is why you need to be tuning in when I'm doing videos. I can help you save your headaches from all of this glabber. Oh yeah, it's finna pop up through. I said, no, y'all, I see it falling, and sure enough, look what happened. Now, let's get on with it. Number two, real quick, the signals results for those who want to know. Last week had a fabulous week. I think we broke a record for the scalping group, though. They had almost 11,000 pips. They had 10,000, and y'all can see it. You can kind of see it, but you can't see it. It's right there. They did 10,942 pips for the week in the live scalping session through the indices. And as far as the regular signals on the currencies, we did 12 wins, 5 losses, and 1 break even. So we have an amazing week last week. So again, if you are interested, go ahead and join that. Next, Fed interest rates. Now, this is important, and we're going to get into the lesson, okay? Very, very important. And by the way, the holiday special is still going, so you got until next week. And if you're an affiliate, you still got time to make your money, and we have been paying out affiliate fees daily. Fed interest rates came up last week, and I have taught you guys numerous times on here about Fed interest rates, and we can lead this into today's lesson. Fed interest rates were, I have been telling you guys for the longest, the interest rates are extremely important news that you don't really want to trade around because you don't know what they're going to say. Now, here's what I have taught you guys. Now, we're talking about trading like the banks, okay? So now we're going into the lesson starting with this news announcement, okay? So pay attention, okay? Pay attention. I have been teaching you guys on this channel for the longest how to determine interest rates when they're going to come in. I have been telling you. I said it's very simple. All you need to do is see how many people of the quote unquote middle class are employed. The more middle class people that are employed means more people are paying taxes to the government, which means the government is getting paid. Well, let me be careful so I won't get censored. Bottom line is they when you make money, then they make money. Okay. All right. So the more people who's back at work making money, you then turn around and pay taxes to the government, which means the government then is getting more financially secure off of your labor. Are you guys hearing me? Okay. So if you see that employment numbers are low, then you already know that the government cannot raise interest rates yet because, watch this, because who are they going to raise the interest rates on? If the poor don't pay taxes because they can't afford it, and the rich avoid taxes because they use tax laws to be able to avoid paying taxes so that they can reinvest the money back into their business to grow the business to give you a job. So get off your high horse where rich people don't pay taxes because they use that money to reinvest back into their company to make more jobs available for you. Duh. Okay, so don't buy into the stupidity you keep hearing off the news. Oh, rich people need to pay more taxes. Why? That means less jobs for other people because they use that money to make jobs versus paying the government who's going to waste the money. But let me shut up before I get censored. Let me stop. Let me be careful. But the point is, the only people who typically pay taxes are the middle class. That's why, and again, I've been screaming this and teaching this. And by the way, this week, if you're in my class, we will have class this week. My wife told me we don't fly out until Thursday. So if you're in class, come on to class this week. On Tuesday and Wednesday, we will have class like normal. Okay. But let me say this. As I have been teaching in class, and I will continue to tell you guys, that is why when they're doing elections, you don't never see them in your neighborhood until they have election time. Okay, then all of a sudden they hanging around in your neighborhood. Why are they doing that? And I'm teaching you how to think like the banks. So we already began the lesson, but I'm walking you through the process slowly. Notice I haven't started off with charts. Did you see that? Most retail traders make the mistake with starting off with the charts first. They have zero comprehension of what is impacting the charts. Notice what I'm talking to you about. I am not talking to you about looking at your trend lines, looking at your indicators, looking at this and that. I'm explaining what is happening in economic news that is impacting the current country's economy, because whatever impacts that country's economy will affect its currency. Let me repeat that again, because this is where I told you guys, I'm teaching you how to think like the banks. They never start with charts first. Only retail traders do that. Did you understand what I'm saying? Because the retail trader doesn't know how to put together 2 and 2. They don't know how to connect the dots. So they run straight to the charts without understanding what's moving these currencies. This is why I educate people on what to look for, what news events you need to pay attention to, because these are the ones that move the currency in one direction or another. For an example, for the last week or so, the NZD has been falling. Why? Can you tell me that? Huh? It broke through support levels. It broke through resistance levels. It broke through a whole lot of levels. And people were trading it and didn't know why it was doing that. Can you tell me why? Or you don't know? The majority of the people who's going to watch this video don't have a clue. But banks and institutions do, because they start with news first before they go to the charts. They want to know what's going on in that country's economy first before they go to the charts. Why? Because whatever is happening in that country's economy is going to affect the currency itself. So then when you go to the charts, you pretty much have a bigger understanding as to what is going on with it. Come on now. Only retail traders don't give a flying fart about what's going on with the fundamentals, about what's really going on in the country's economy, yet you trade in the country's economy. How stupid is that? When you are trading currency pairs, you are trading two countries' economies. But the retail trader don't want to hear nothing about what's going on in them two countries' economies. And you wonder why there's such a high percentage of people losing trades and never finding success in the markets. You wonder why? Because one of the most important things you need to know, you don't even want to know about. You know how many people talk bad about me because I'm trying to teach the same thing that the banks do. Yet we got all this beat the market makers method. How many of y'all tried that and got your head peeled? Trying to do the market makers method. I'm not saying it don't work. It does, because I studied it for 3 or 4 years straight, nonstop, 7 days a week. But what I found is when you begin to understand what the banks understand about that currency pair, then the market makers method will work a lot better, because you'll understand whether it's at level 1, level 2, level 3, M's, W, midweek reversals, all these different things they're teaching. You will understand when and why. See, it's not just what it's doing. Why is it doing that? But see, the retail trader don't want to know none of that. No, man, get out of here, man. A lot of people going to tune off this video right now because they're going to go, whatever, bro. Oh, here he go with that fundamental stuff. Okay, that's fine. But not a single person who has ever come to my channel can negate the fact that if I was sitting here doing the same exact video for a room full of bankers, not a single person can debate me and say that the bankers will not agree with what I'm saying. Not a single person in the history. I've been doing these videos for about three years now, 4 years, something. I've been on here a long time. And not a single person who has ever come against me can disagree that if I was literally doing a speech like this to a room full of bankers, telling them that they should look at economic news before they hit the charts, not a single person disagrees with me, but that the bankers would agree with me. But yet they want to come against me and call me names and scam and this and that, because I'm on here trying to teach the retail trader the same information that is widely accepted by bankers. And yet I'm being under attack versus in agreement. How are we going to beat people when we have half the information? And what makes this worse, we don't even want to know the information. I don't want to hear all that. Price action is king. Okay, that's fine. What's causing the price to have its action? Do you know? When you lost that last trade, do you understand why? I like to trade gold. What actually moves gold? Do you know? Well, see, when I see this setup, what is creating the motivation for that setup to take place? Do you know? And yet you want to make this a full, I'm sorry for stepping on toes, and you can, do what you want with my channel. You don't have to like me, that's fine, but I love you enough to tell you the truth, because this is what held me up for so long. This is what held me up, because I didn't understand. And here's the trouble. Most retail traders want to be AKA a full-time trader. But at the same time, they want to have half the knowledge and do half the job. So you want to make a full-time career by being a half-butt trader. This was not in my notes. I don't know why. Somebody need to hear this. You want to be a lazy half-butt trader with half the knowledge, but yet you think you're going to beat the banks. All right. Okay. Do you think? I can't help you. But at some point, when you get worn out and them charts keep whooping your behind, at some point you're going to come back to this channel and say, you know what, man, you probably ain't going to say nothing, because that's what most people do. When they talk bad about me, then they come back and they don't say nothing. They just be in the background silent. No, it's okay. Shoot me an email. Talk to me. Why? Because I used to be that person who thought I knew, until I realized, you know what? You can't play a full game with half the information. When you watch football or basketball, you see them playing offense and defense. See, they have to understand both sides. LeBron James, great. Stephen Curry, he just won the champion as far as the top three-point shooter in history. But yet when he gets done shooting that three-point shot, he still got to get to the other side of the court and be a defender. So you got to know both sides of the game. You can't be a one-trick pony in here and expect to have a full-time successful career. You understand what I'm saying? So when I'm teaching you guys about how to understand interest rates, how to understand when they're going to make these announcements, all these different things, listen to what I'm telling you, because then you'll realize I don't need to trade this pair at this time. Or if I do, I need to be careful because of XYZ. I told my students, those who was in class, I said, here's the deal. I know, and I have yet to have lost in I don't know how long when I have predicted what interest rates are going to be before the announcement comes out. I have told my students, I say, here's what I think their interest rates are going to be. And I never went to school to be an economist. I taught myself because I don't want to learn their lies. I wanted to learn the truth. And it was very simple. If the people are not in full force back at work, meaning the middle class, there's no way they can raise interest rates. Because who they're going to raise them on? If the government is the one putting the money into the banks and they raise the interest rates, well, who they're going to raise them on? Themselves? Of course not. Okay. But here's where the danger comes in. And you guys who traded the ones who traded the USD, if you attended class this week, I told you in advance, I said, be careful. I said, because here's what they do. You already know what they're going to do this quarter, which is nothing. What happened? GBP announced their interest rates, and so did the US. What happened? Nothing. They didn't raise them, just like I said. But here's what the numbers where the USD jumped real big. The USD jumped real big because of the promise of doing it in the future. That's the part of the announcement nobody's aware of. They can lie and say, oh, well, next quarter we gone, and there you go. And the price of that currency, boom, shot through the roof. And you've seen it happen with the USD itself, which is why the bankers made a lot of money. They knew that the lie, well, I can't call it a lie because they could possibly do it. But here's what the bankers knew. They knew in advance that they ain't going to raise interest rates today, but they potentially are going to do it in the future. And therefore, when they bought that currency on the US dollar, it shot up and they made their quick money real good off of that announcement. Why? Because they knew in advance what was going to happen. Now, did they start with the charts or did they start with the fundamental news first? You tell me. You tell me. So number one, banks have an advantage over retail traders because they do their homework first on what's going on in these countries before they go to the charts. Please write that down. That's number one. That's advantage number one. They know how to play offense and defense. Are you understanding me? They know how to understand what's going on in the country's economy, and then they go and execute a trade. The average retail trader goes straight to the charts and don't know anything about what's going on in the other country's economy. They don't read no news events. They don't know nothing. Now, do you have to know everything? No, of course you don't. There's no way to know. We don't get the insider information, okay? But what we can do is we can tune into channels, like clicking the like and subscribe button to a channel like this one, so that when videos come out that's giving you authentic, solid, straight up, no bull crap information, you're tuned in so that it can give you the advantage of understanding what you're not being told. Okay. Number two, there's a website. And I told my students to check this guy. I like him. He trades big corporate money. So it ain't like you can just join his little thing. He's big, big. He does big money. Okay. But it's called, and I'm giving you to write this down, Mark to Markets. M-A-R-C. Okay, that's how he spelled his name. Mark, M-A-R-C, Mark to Markets. Just that's a great source. And there's many others that I've told my students about, but I like the way this guy, because he does trade currencies. Okay. A lot of news channels, that do fundamental news, they don't really cover currencies that much, but he does, because he's a currency trader just like us. Currency trader means Forex trader. Okay. So because of that, I think that I like his information because he has the ability to break it down to tell you what's really going on, and it'll only take minutes to read his articles. Okay. And that's one of my resources that I go to, amongst many others, because I really want to know what's going on. One of the things that got me on this little road, just so you guys know, is I got tired of using all these different techniques and stuff like that, and still losing a ton of trades. Okay. And not knowing why, because they said to mark the charts this way, do this, and I was still losing. But then when I began to understand, okay, it will work on certain currencies at certain times, because if the country itself is having an issue, then the currency is not going to respect any trading rules. That's when my eyes were open. So I don't need to keep trading or having 50 different new strategies and 50 new indicators, because it wasn't going to help. Why wasn't it going to help? Because the country itself was in turmoil. So their currency was in a free fall. So if the currency is in a free fall, or it is shooting through the moon due to fundamental or something going on with their country, or their president just said something, there is no strategy on earth that you need to worry about trying to apply, because it's not going to fix the issue. It's the country itself is having an issue. So let me give you an example. The NZD, and I know there's a few people here now and thousands are going to be watching this later. Take heed to what I'm teaching you. This is the advantage that banks have. They take their time to do their little due diligence. So why was it that the NZD fell so hard? Same reason why I told y'all a long time ago. They can say that they're going to raise interest rates, but when it's time to do it, they don't have to. So what happened was, according to what I heard, is that the NZD had promised to raise interest rates, but when it came time to execute it, they didn't. And as a result, people got pissed and started dumping the NZD. Is this making sense to you? See how you got to know some knowledge, a little bit of reading. Warren Buffett, let me throw this at y'all. Warren Buffett, one of the richest people on the planet. Do you know, research what he said. He said that he spends hours a day doing nothing but reading. And yet he's the richest person on the planet, one of the richest people. He's not the richest, he's one of the richest. Isn't that amazing? That rich people study and poor people run to the charts trying to make a quick dollar. And we're wondering why they keep being successful, and yet we're mad at their success and then start demanding them to start paying more taxes so that we can get our free government checks. Through who? Through the rich people. Well, all you're doing is hating. You're hating on them because they were willing to do the work you weren't. And now they reaped a harvest for their hard work. And now everybody want to come against rich people. No, why don't you just do what they do? Stop being so thick-headed. Listen to all these little youngsters who's giving bad information. Well, all you need to do is just do this quick strategy right here, man. You know what I mean? Renting a Lamborghini, renting out places like they do in a music video. Now, I ain't saying all of them because some of them are legit, but y'all understand what I'm saying. And everybody rushing to the quick dollar versus, hey, if you're going to do this as a full-time career, then do what the bankers do. They research and spend a little bit of time. I do mine basically during the day on Sundays. And I'm telling you guys ahead of time, this is what I do. I like to research on Saturdays and Sundays when the market is closed. Okay. So that by the time the market's open, that's one less thing that I'm stressing out and being emotional about, because trading is an emotional business because it has to do with your money. Right? So the more things you can do before the market's open, the better off you're going to be, because you're going to be less emotional, because those things you can make notes. Like what I do is I make notes. Okay, which currencies are going to have big news events this week? What days they're going to happen? Because I don't want to be trading, going into that event most of the time. Okay, unless I know what's going on, I try to avoid trading in advance on that currency because anything can be said. Like, for an example, the interest rates on the US dollar. I knew they weren't going to raise them, but I didn't know whether they're going to say they were going to do it in the future. See, it's what did they say after? It ain't the action that you know, it's what they say after. And what they did was they did exactly that. They said, oh, we plan on raising interest rate in the future. And boom, the US dollar shot through the roof. What did it shoot through the roof because of the actual announcement? No, it shot through the roof based off of what they projected they would do. And that's why most retail traders keep losing when they trade in news as well, because they're not wise enough to understand that it can go either way based on whether the person is going to promise a future action or not. That's why, unless you know, stay away. Let's get to the next one. I'm running out of time. Number 2, highs and lows. Here's number 2. Here's number 2. High to low, not low to low. Time frames. Here's the difference between banks and institutions versus the retail trader. The high to low strategy, and I've been teaching this on this channel and to my students for I don't know how long. I tell you guys for the longest, you start high to low on the time frames. You go out to the daily time frame or the 4-hour time frame. You can go even to the weekly. I don't give a flying fart what you do, but you always start high to low. Do you hear what I'm saying? Because that's what the banks do. They start off on the 4-hour, the daily, the weekly time frames. They go all the way out and see what the projections are looking at on the higher time frames. And then they look for entry points, which I believe they use like the 1 hour, 30-minute, whatever, whatever time frame floats your boat. I don't care if you use the 5-minute to get in. That's cool. I really don't care. But start looking at the direction first off the higher time frame, then you enter on the lower. Now, some of you guys may say, well, that's common knowledge. If it was so common, then why so many retail traders don't do it? You tell me. You tell me. I told you, I literally only know one professional scalper, and that's Miss Jenny, who's in our signals group. That's the reason why, and I wish y'all could see it, they did 10,942 pips last week off the indices. She's the only one I know who have proven to me long term over the years that I've been working with her for several years on our squad. She's the only one I know who have proven to me and has a track record because she trades with the students live in the signals group, can prove to me that they are a successful scalper. Majority of people come into this Forex arena wanting to be scalpers, but they have no understanding of what they're doing. And they don't want to be trained either. And yet, by the time you get done giving your hard-earned money, and some of y'all who's going to watch this video later, you know you fit in this category. You have given the market thousands upon thousands upon thousands of dollars, and you ain't one step further closer to your goal. And yet you don't pay a single person a few dollars to get educated. And it don't have to be us. If you don't want us, that's fine. It's others. But get an education into what you want. If you want to be a doctor, you got to get an education. If you want to be an engineer, you pay for an education. Come on now. What professional business do people jump into if you ain't an entrepreneur that you don't go to school to at least learn something? Oh, I'm gonna be a real estate agent. Well, where you gonna learn it at? Oh man, I'm gonna YouTube it. Oh, okay. Do you think? Are you understanding what I'm saying? Banks don't trade like that. They start from the higher time frames, get the bigger picture. The eagle, let me give y'all an example. I tell my students this all the time, and I'm actually going to be flying out on Thursday. So one of the things that is great about understanding a particular area is when you're in an airplane, you get to see the whole panoramic view for miles and miles and miles. You get the bird's eye. That's why they call it a bird's eye view. Why do they call it a bird's eye view? Because the bird is so high up, it can see for miles and miles and miles before it dives down to go get its prey. It can see the dangers that if I come down and try to grab this prey, is there another one that's going to try to get me while I'm down there trying to get my food? See, it sees everything from a panoramic view. Okay. And then it goes down to the ground to go get its food. Do you understand that? So that's the way banks trade. They get the panoramic view. They get the news. Okay, what's any big news coming out on this currency? Okay, it's still dealing with weakness. Okay, cool, cool, cool. And then let's go to the charts. Let's start with the bird's eye view from the higher time frame, whether it's the weekly, daily, 4-hour, whatever. Let's start out there, and then let's drill down to a good entry point on the lower time frame. And that's their executed plan. What is the executed plan for the retail trader? Oh man, I'm going straight to the 5-minute charts, man. And then I'm gonna go down to the 1-minute chart, and then I'm gonna see, oh man, why I keep losing? Oh, I keep losing. What's wrong, man? I tried this strategy, and then, well, all right, on to the next one. Let's go to the next YouTube channel, and then let's buy their indicator, and let's start it all over again. And they do this week after week after week. Meanwhile, they keep refilling their trading account over and over and over again, and they make absolutely nothing. Ain't that something? What makes it even worse? It's because here's what you don't take into consideration, retail trader, that the banks and institutions do. Whatever broker or trading platform you're on, that broker is going to charge you a fee to enter the trade. So if you're trying to go for, and I was just literally talking to someone yesterday about trading, and I said absolutely nothing. Because if this is what they want to do, then fine. If this is their strategy, no problem. See, I'm not in a position, or I'm too tired. I've been at this for years. And I have trained out on thousands of people. I've talked to thousands of people over the years in the Forex arena. And I've come to the conclusion that people want to be ignorant and stupid and stick with their dumb strategy. Who am I to change your thought process? Because if that's what you want, then so be it. If you don't want my opinion about it, I won't give it no more. If you want to be stuck on stupid, then do your thing. So I was having a conversation yesterday with a person, and I said nothing. I just, hey, no problem. Because think about it. If you're a scalper, think about this. See how the retail trader thinks completely different from the banker. Think about it like this. If you're a scalper going for 5 pips, how much does the broker charge on average pairs? And don't give me, oh, well, my broker, he only charges 1 pip or less than a pip on, yeah, but when they advertise that, have you noticed they only advertise it like on main pairs like the Euro USD or something like that? But when you go to the other pairs like the GBP, NZD, and all these others that people actually like to trade more often than just the Euro USD, did you see what those spreads were? Huh? Those spreads can go anywhere from 3, 4, and 5 pips on average just to enter the trade. So if you, scalper, is trying to go for 5 pips, but the broker's charging 3 to 4 pips, it don't take but a pip of movement before your stop gets hit. Do you see how the retail trader thinks completely different? Completely different. They don't take this into consideration before they execute their strategies and plans. They don't think. Let me give y'all an example. We were in a trade that I sent out a signal on. And I have told you guys on this channel, if you're going to be a swing trader, you've got to consider this. What happened was we ended up adjusting our stop loss and our take profit for one big reason, not because of the original settings not being correct. The original stop loss and take profit were perfect. Problem is that when it came to the, watch this, take a note, because I'm giving you information in case you're new, okay? And again, I know some people watching now, thousands will watch this later, take note. Every single trading day at 5 p.m. Eastern Standard Time. Write this down. Don't say you didn't know. Because I'm telling you, 5 p.m. Eastern Standard Time, the average broker is going to rip you off for the first hour of the new trading day, because it doesn't matter what time it is in your country or your city. In the Forex market at 5 p.m. Eastern Standard Time, it is considered a new Forex trading day. And for the first hour of the trading day, your broker opens the spreads from a normal 3 to 5 pips to 15, 20, 25, and even 30 pips. One video in my history, go back and look at it, I showed live proof. This was several months ago. I did a live video. I took a live trade at the opening of the trading day, and I showed proof of how big I was upside down because of the broker spread. And then you come back an hour later and enter the same trade, and it was normal without the spread. I did a live video. So what we have to do as swing traders holding the trade open, what I told them to do is I said we have to maneuver our stop loss, not because of the trade itself, which the trade itself didn't budge, but the broker opened up the spread, and I told them, and it was live, 15 pips, 14 pips. So you had to add an additional 10 pips to your stop loss to avoid it getting hit, not because of the trade itself, but because of what? The broker spread. Because if we didn't do that, we would have lost the trade for no reason other than the broker, your broker, taking advantage of who? The retail trader. Now, before you debate with me, do you believe that banks and institutions, if I was paid to do a seminar with banks and institutions right now, and I'm talking about, oh, well, you can't use a 5 pip stop loss. You can't use a 7 pip stop loss. Do you believe that the banks and institutions would want a refund for paying me to come and talk to them about something as petty as this? Of course they would, because they automatically know, man, we don't trade like that. Who you think we are, retail traders? See, they would get a refund. They would want their money back if I had a conversation like this with banks and institutions, because it's common knowledge to them not to pull something like that. But to the average retail trader, this is brand new information. Interesting. Interesting. And yet we wonder why the banks and institutions are making so much money. Well, could it be possible that they ain't tripping off of using a 50 pip stop loss, a 75 pip stop loss, even a 100 pip stop loss? They don't care, because they're holding their trades and making all this money. And you wonder how they're doing it, because they ain't doing what you do. You're doing the very opposite of what they're doing. And yet you want to have the beat the market maker? All right, good luck with that. Let's keep going. I'm running out of time. Oh, this is a big one. This is a big one. Banks and institutions have measures in place to control certain aspects. And here's the next two. Here's the next one. They have, and you might as well combine these two together. They have parameters in place that will control, watch this, most of y'all know about this one, financial management. In other words, money management rules, right? But here's what you don't know. They also have measures in place to control their emotional management. They only trade with a small percentage of their account, so that if it wins or loses, it doesn't make that big of a difference to their overall portfolio. Therefore, they don't need to lose their freaking minds like you and I do, wanting to toss your computer out the window and kick, cussing and screaming and fussing and crying, having a spasm, because you're using 25, 35, 45, 50% of your account on one trade. And when it didn't work out, you lost all that. Now you're scrambling, trying to look for the next trade to get into because you're trying to make back what you lost. With them, they don't care. It's only a 2%. We'll come back tomorrow. Therefore, it puts controls over their money, and it puts control over their minds. I'm going to say that again. It puts control over their money, and it puts control over their emotional mind. The average retail trader has no such rules, and as a result, disaster. If you disagree with me, that's fine. I would love to hear your perspective on it. Shoot me an email to superezforex@gmail.com. I would love to hear what you have to say about it. But if I'm talking to the average bank and institution, they would kick me out of the room and say, give me back our money. We ain't paying you for this stupidity. Who you think we are, retail traders? We know this already. Teach us something we already don't know. We already have this stuff in place. Why are you talking to us like we're 2-year-olds? We ain't kidding. We ain't new to this. We true to it. We ain't ashamed. We play the game. We ain't a fool. We made the rule. How many more raps you want me to make to put together on why institutions and banks will be irritated if I gave them this speech? But the average retail trader acts like they ain't never heard nothing like this. Come on now. We got to do better, family. Let's go. Next one. The banks and institutions, they execute one big thing that makes them highly profitable that the average retail trader does not. And it starts with P. It's called patience. This is why the average retail trader, if you do your own research, I'm telling you, y'all don't have to agree with me, but do your own research. The average retail trader tends to trade on the 15-minute or below time frame. They don't know what's going on in their country's economy. They don't want to know, because if you talk about fundamentals, they're going to slap you in the face and say, no, I'm sorry, sir, you're wrong. All you need, price action is king. How many times have you heard that? Price action is king. Price action is king. But if I talk to a bank and institution, do you believe that they say price action is king? See, come on now. You ain't got to debate with me. Just think if I worked at a bank, which I actually used to work at a bank years ago. When you think from the level of a banker, do you believe that banks and institutions say price action is king, that all you need is price action? Do you believe that's what they say? If you do, that's fine. But the average person who's going to be listening to this video, either now or in the future, I'm pretty sure you agree with me, they probably not going to say that. So if they're not saying that, why is that always on the forefront of your mind, thinking that this is all you need and you keep flunking the test of the market? And then on top of that, you have no patience. They have zero problem taking a trade off the daily, off the 4-hour, off the weekly, off the 1 hour, and then just sitting and chilling for the week. And then, yeah, it does all that little wiggling around, but then towards the end of the week, they already know exactly what's going on with that country's economy. So even if it does a pullback, they know they ain't going to be there long. And then it drops like a rock, just like they anticipated. Why? Because they did all their homework before they entered the trade. So when they entered it, they were looking, watch this. They were looking just for a good area to enter, not the precise pip, but a good area, a good range to enter in. And then they were comfortable using a loose stop loss so that they anticipate that it's going to do its ups and downs, its pullbacks in the market and stuff like that. They're not tripping. So they don't have no problem with using a 50, 75, 100 pip stop loss, 120 pip stop loss. They don't care. They just use risk management, 2% or whatever it is. So they don't compromise their stop loss to try to double their account in a day. If 2% of a 120 stop loss is what it takes, and 2% of a 120 stop loss is what it takes, and then they let it fall, and then you see them making all this money, and the banks are making record profits, and you ain't making nothing because you ain't got no patience. Think about it. Debate me all you want, but the average retail trader trades off the 15-minute or below time frame, and with no training to understand, okay, here's if you're going to play those lower time frames, here's the rules for that. But you can't beat the market maker, because the market maker don't do that time frame. The banks and institutions, rather, let me rephrase that. The banks and institutions don't play on that time frame, so you can't beat them at a game they don't even play. Come on, Jesus, this is something. How you gonna beat somebody at a game they ain't even playing with you? You in there by yourself playing. Now, who you are playing is the market manipulators. That's a whole different group of people. And they specialize at targeting retail traders. You don't even know who your enemy is. How you gonna beat somebody you don't even know who you're playing against? This is ridiculous. Oh, I thought I was gonna be fighting against Holyfield. I didn't know I was fighting against Mike Tyson. Why didn't you know, idiot? What? Well, I just signed a contract and they just told me I was fighting somebody. I didn't know who I was fighting. Oh, God, that's so hilarious. Whew. Last one. Let me get out of here. And this is big for your family. Your family's going to appreciate this last one. Okay. They don't stare at their charts all day. They have banking hours or work hours. And when they are done and they close down. They don't stare at their charts all day. They don't have their charts on their phone where they're just staring at it all day. They place their trades, place their stop loss comfortable in a comfortable area range based off of what? Lower time frame or higher time frame? Based off of the higher time frame. So they look at the charts, they enter on a lower time frame, trying to get in at a good range, not the perfect pip, but a good range. But then they understand from the higher time frame, this is about the area where the price should be able to do its thing, whether you're doing a reversal trade or with the trend, whatever your decision is. But they know, okay, here's the area from the higher time frame. So if right here is where the level is where I'm entering, but here is where the best situation was, then I'm gonna place my stop below this area right here, and everything is in place. And they walk away and they get on a yacht and go have a good time at the yacht club or on the golf course doing other business things. The average retail trader spends so much time staring at their phone and their trades like it's social media. We have social media addicts, but we also have retail trader addicts. And you spend just as much time on social media and on the as you do on the MT4 and on the MT4 as you do on social media. Matter of fact, some of you guys, you spend more time on your MT4 than you do with social media or your family. Tell me I'm lying. Tell me I'm lying. You spend more time on your phone staring at that little trade than you do with your family. You're distracted at work. You're distracted in everything you do. The only reprieve you get is when the markets themselves close on Friday, and then you get Saturday to try to make up for all this. But even then, you're up on them charts, studying the charts, not news, not what's going on in the country's economies. You're back studying on what? The charts. And then you rinse and repeat the whole process. And your boss is about to fire you from your job because they keep seeing you on your phone. Now they thinking that you're texting people. You ain't texting people. You're actually just staring at the charts. Hoping that one day you can become a full-time trader. But look at how it's destroying you, and you're just a part-timer, or so you think. Because I must leave you guys with this. I have been saying for the longest, and I come to realize this. And how do I know? Because it happened to me. I realized it. And this is painful, but this is a painful truth. I said for the longest that I have come to the conclusion to understand this. And don't you ever, if you never hear nothing else from me ever again, at least remember this, because this is truth. I have said for the longest, after so many years of being in this business and seeing what happened to me and others, and I have come to the conclusion that this is the truth. When it comes to Forex trading, the average retail trader wants to become a full-time trader, meaning I want to quit my job and trade full-time. Problem is, is that the average retail trader doesn't realize you already are a full-time trader. You're just not successful at it. And that's a big difference because you average more hours in a day and in a week staring at them charts, staring at your phone. After you place the simple trade, you go into instant panic. You kind of like in so much panic and fear over that trade being turning into a loss until guess what? You're so unfocused on anything else that's going on in life. So the average trade to actually place a trade only takes about 30 seconds. To do a good analysis on the trade, maybe about 10, 15 minutes. Okay. And then you execute the trade, which takes about 30 seconds to do. So to be honest with you, to place one good trade takes about 15 minutes for the average person. If you're good and you just know what you're looking for, it'll be far less than that. But let's just go with average, about 15 minutes worth of work a day for one good trade. Would you agree? Okay. Would you agree? So if 15 minutes a day is all it really takes to find and place one good trade, let's just say 30 minutes to an hour. Okay, that's cool. Shouldn't take that at all. But let's just say you do in-depth analysis. You want the Don't She on channels. You want the Elliott wave theory. You want this, that. You want to mark. I mean, okay, that's cool. Do your thing. That's fine. Let's give you up to 30 minutes for one trade, then 30 seconds to place it. Okay, you got 30 minutes to work the work in a 24-hour period. But then you tell me, then what happened with the other rest of the time? Why are you always on the charts? What's going on here? If you did your homework on it, you placed the trade, you placed the deed and stop loss, and you put your take profit. What are you doing? I mean, honestly, loved one, what are you doing? Why don't you have time? Because if that's all it takes to place a trade, what are you talking about full-time trading? If it only takes, then what are you talking about full-time? Full-time becomes when you're addicted to the charts and you can't turn your face away from it. And then even after you executed your plan, your strategy, stop loss in place, take profit in place, every little tick, every 5 minutes, you staring at that trade. And so now you're in complete panic. If it does a pullback, you're freaking out and finna piss on yourself. Your family don't get your full attention. Your job don't get your full attention. You don't give yourself full attention. So the market closing on Friday and Saturday is a blessing for you because it finally gives you a break from your panic. But even then you don't stop because you're right back on the charts, still studying charts and indicators, marking them up and this and that to rinse and repeat the whole process all over again. So realistically, you're never off work from the charts. You already are a full-time trader. The goal is to stop you from being that full-time trader and move you into being a part-time trader like the banks and institutions do. They trade, place those trades, and then they move on to other investment ideas. And then when the bank hours are closed for the day, the banks shut down and they're out of the door. When the weekend comes, they're out. When it's holidays, they're out. They're not trading, they're out. So they have a cutoff period. You don't. You're 24 hours, 24/7, like 7-Eleven. You never close. Am I lying or am I telling the truth? You tell me. Again, you may not like what I have to say, but again, I'm your brother. Okay. I'm a fellow retail trader and somebody got to speak up and tell the truth. Because I guarantee you can scour the internet and you ain't gonna find nobody talking about none of this stuff I talk about. Nobody. Nobody comes close to even touching on this. And yet every trader around the globe is affected by what I'm talking about. And nobody says nothing. There's a scripture in the Bible that talked about a voice in the wilderness, crying in the wilderness. That's what I feel like. I feel like I'm in the wilderness, just crying from the distance, trying to yell from. I'm in the forest, trying to yell to people in populated areas, but I'm up in the forest by myself because It seems like I'm the only one seeing this. It's like I'm the only one seeing it. I'm like, God, why ain't everybody else seeing this? This is obvious. Why don't people see it? For some of you guys, the worst thing you ever done was to get started trading because you're not willing to be taught and mentored to get your thinking straight. And then they talk about market psychology. Yeah, I read a whole bunch of them, but they didn't talk about this. This is tormenting and tearing families apart. This. Ain't nobody talk about it. Anyway, if you're part of, let me leave y'all with this. If you want to join us, again, here's what happens. The Simplicity system, we took $100 off of it for the holiday special, and Christmas is coming up this week. So when the sale is over, don't ask me nothing. You want to procrastinate, that's going to be on you. But the deal is that all I'm telling you, by the trading system and my weekly classes, I have never in the history that I've been around ever charged a single person a dime to come to my classes. As a matter of fact, people said, man, can you private mentor me? I say no, because the same thing I'm talking about, if you pay me to do one-on-one for you, I will be teaching you the same things that I'm teaching all my students in class at no cost. See, I could have been charging people to do one-on-ones, and I have declined that too, because I don't need your extra money, because I'm willing to teach you every single week for free. Just buy the trading system so that when we're talking, you're using the same thing that I'm using. So when I'm referring to you to look at the charts, you're looking exactly at what I'm looking at. So the Simplicity system has a $100 discount. If you haven't gotten it, get it. And then in there, you'll see the links. And every week, like this Tuesday coming up, join me in class and I can teach you one-on-one in the class, because I typically hold class back and I take almost, unless I have an appointment, I stay back and try to take every hand of any person who has ever asked me questions. And some of y'all who've been in my class, you know for sure I ain't never rushed you unless I had, and I told y'all in advance, hey, I got a doctor appointment, or I got to take my wife somewhere, something like that, or I got to fly out. Outside that, I have never rushed the class. Whoever asks me questions, I have always taken my time, and sometimes they have 2, 3, 4 questions. I answer every question. Then sometimes they will, especially new people, they'll ask their questions, and then towards the end, I say anybody else, and then they'll raise their hand and ask some more questions, and I answer them all. And I ain't never charge an extra dollar for it. All I ask, just buy the Simplicity system, because that's the system we use, and I can talk to you about different things you can do with it, and we can go from there. But other than that, I ain't trying to scam nobody. I ain't tripping. And especially with the holiday special, because it's only $199. And then if you're an affiliate, half that money goes to you, because we're still paying a $100 referral fee for affiliates. So $199, and half of that's going into y'all. Then I've been posting daily where we've been donating money to all the whole time. Every day we make financial donations to nonprofits. We take the remainder of the $100 that's left, make a donation out of that, and then the remainder I paid staff. So how much am I really making? Hmm? Hmm? You do the math. $199, one-time fee. Half of that goes to the affiliate, so that leaves $100. Then we donate out of that. Then we pay pay staff. How much? How much am I scamming you for? Oh yeah, scam. Okay, how much? How much is my net worth off of after paying 50% to an affiliate, and then more money being donated to nonprofit organizations, which I post in there showing proof from PayPal that we did donate from our account, and then after I pay staff fee. How much am I making? How rich am I getting? That's what I thought. Come on now. Come on now. You have to get mentored properly, or else I'm telling you, I'm not saying you can't make it, but you're going to have a hard time. You really are. Because what you're being taught through a lot of these YouTube videos is missing. I'm not saying they're not good information. There's a lot of great ones out there, and I ain't got nothing against them. But I am saying that there's more to this game if you're going to do it to provide as a way of, let me say this and leave you alone, as a means and way of providing income to support your family. If you're going to walk away from your job, and think about it like this, because this never makes sense to me. Why would you want to be involved in something as a full-time career, but you only want part-time information? That's like you going to your job and you went into training. They didn't, even a lot of jobs, most jobs, except for fast food restaurants or, something like that. Majority of them, they're going to put you through a training process first. and they pay you to go into training so you can learn their way of how they want things done. Even if they hired you because of your past experience at a different company, it doesn't matter. That got you in the door. But when you come in the door, they put you into training. And from that training, they teach you how they do things with their products and services. Am I right about it? And that goes on for several days to a couple of weeks, depending on how intense or how important that product or service is. Then after that, they put you in an area where, yes, you can get on the phones or do whatever you do, but you're still going to be mentored from somebody who's been on the floor doing it for a while. See how they put you through a training process. And then when you get good, like some of you guys, you've been on your job for years and you probably are the supervisor, manager, or the person doing the training. See, it took you years to get to the level you are. And now you come back and you're the one who's training others. But yet when we come to the Forex market, don't nobody want to get no training. And yet they want to say, this is going to be my new job. Okay, whatever you say. Again, I'm at a point, people are grown people, and let grown people do what they do. If this is what they decide, then so be it. I don't argue and debate with people no more. I ain't here to defend nothing. That's your thought process. Do it. But your job, you would have been fired a long time ago if you'd have walked into the door talking about, I'm going to be the top salesperson, and you didn't want that. I don't need y'all's training. Just put me on the phones. I got it. They would have washed your butt right back out that door. Why? Because it doesn't matter what you thought you knew. You need to come in and learn how we do it in this field. And then from there, you progress. And now some of you guys, you can do your job without even thinking about it. It's just robotic. It's second nature. And that's the way trading is going to be for you. It's going to be second nature to you after a while, because now you understand how it really should be played, not what you found on a YouTube video. Peace and have grace. Enjoy your Sunday.